everyone who's like a DeFi degen knows the finish line of crypto is stablecoin farming.
Hey everyone, welcome to another episode of the Craft Podcast. Today, our guest is Jason Hitchcock, who is the founder and GP of Four Moons and a bunch of other stuff. Welcome, Jason.
Hey, how's it going?
Great, thank you. Thank you for spending your Saturday morning here and afternoon there in Miami. Is it right? With me?
Living in Miami. I just moved here a couple of weeks ago from San Francisco.
You know, that's been a whole theme, a big theme last year and this year I've seen on Twitter, especially with the type of work and investing you're doing. So could you give a quick intro on what you are working on right now?
Yeah, I spent like the last 10 years working at startups, building out go-to-market teams on, whether it's building out sales teams or customer success teams or growth teams. Worked at Twitch a couple of years, and then got really into DeFi investing during, around DeFi summer, sort of like an interesting event, in 2020, when a whole new style of crypto investing emerged. That's probably about 18 months, 2 years old. And me and a couple of friends, some of which who work in crypto, all together sort of formed a war room. And we were just like learning and leveling up at our style of DeFi investing together. And next thing you know, a bunch of our friends were like, could you do a fund? And so we did a friends and family fund. It was around $2.5 million. That fund, it was going to be a 1-year fund. And in about 5 months, we 2.5x'd it. And we ended up getting acquired by a hedge fund. And so now I have like another entity where we manage the portfolio for a larger hedge fund called Kingsley Capital. And so, yeah, Four Moons, we're investment managers. And we invest in DeFi.
So you just basically you figured this out like last summer, and now you're working investing for hedge fund. I mean, that's kind of
we're raising $100 million this year. What a wild 2 years.
That's wild, and it just everything fits, right? Like the people I see who are doing this stuff, they happen to also be moving to Miami. It's just like a giant movement. So can you explain when you just said like a whole new style of crypto investing? Can you explain what the original style or styles were, and then what's newish in the last like 12 to 24 months?
Yeah, I think okay. So if in the past, I think pre-DeFi summer, the way you could bet on crypto, it was like, oh, I hear the positive case for crypto. There were many things that could bring you to it. Oh, like maybe like some sort of like libertarian point of view on money, or maybe you believe that like there was like at some operating system level, this was like a new special computer and you could imagine the applications one day. Or you just saw volatility for whatever reason. All you had to do is buy the tokens and hold them. And that was it. There were maybe other cases where like with BlockFi or Celsius, you could like earn like 4% interest on your crypto, but that's not like life-changing, or that's not behavior changing. Then DeFi came out, and one thing that was interesting is now with DeFi, a series of dApps were created, and what ended up happening is, remember during like the ICO craze when people could raise money with tokens, that's kind of the killer app for crypto, is like being able to raise money with tokens. And the thing about 2017 was there was a lot of apps that just didn't deliver. They built the front door of the house, and people were like, I will walk up to that door, and like, that's a good pitch, I want to invest. But there was like, they never built a house. So, but here we are later, and now like people are deploying smart contracts and they're building full applications. And those apps also use similar mechanisms to raise money. Like they'll do an ICO. But now like there are other types of applications out there. Like there's decentralized exchanges. So like, instead of having to wait to get your token listed on Coinbase, you can just go to the Wikipedia of exchanges, Uniswap or SushiSwap, and list your own token. But the act of doing this requires you to bring liquidity. Like when you list your token there, you need you need people to also put money onto the exchange so trading can happen. And so what's going on when I said a new style of investing, the new style is around when a token launches for a protocol, they have to bootstrap the liquidity around their token so that people can trade for it on different different exchanges, on different blockchains. Like, in order to become widely available and and many tokens, in order them for like their purpose to be, served, they must be widely available. They need help filling up trading pairs. And so protocols will incentivize for they'll put out a schedule. They'll say, hey, we've launched our protocol. For the next 3 years, we're going to be emitting bonus tokens to people that help us bootstrap our economy. If you provide liquidity, we have a really high, we're going to just, this many tokens a day will be split between all the liquidity providers. Maybe they want to build up the number of people staking in their DAO so that they have, a really diverse number of people, a part of their governance system, and they'll reward people for doing that. And so this is where you see like high APYs all over DeFi. Typically, it's a protocol that is in the midst of the bootstrapping of its economy. And when I say it's a new style of investing, the awareness of that process gives you an idea of where you can participate. And like there might be assets that you want exposure to. Like you might want to hold tokens from like osmosis, like a DEX on the Cosmos ecosystem. And then like a great way to hold those tokens is to be a liquidity provider. Not only do you have exposure to the asset, but then you can provide liquidity into their pools to enable trading, and you can earn 80% APY, which is what they're incentivizing. And that will decline over time, but that's like that's a great way to accumulate those tokens. And so a style of investing is bouncing around DeFi, building up positions.
Okay, yeah. So I have a question then. Can we use Luna as an example?
Yeah.
Or Terra?
Absolutely.
So why was that created, and how do you provide liquidity for it? Are you buying like Luna and then staking it? Is that the mechanism for providing liquidity?
There's many jobs to do with tokens. So Terra, why was it created? Terra is a fork of Ethereum. It is actually it's one of the first major L1s used in the Cosmos SDK. It's identical to Ethereum, except transactions are instant. They are nearly free. They're pennies. And then the other thing about Terra is it also comes with a native stablecoin to the blockchain. Like all these stablecoins like USDC, Tether, DAI, those are all made by like protocols on top of that like use Ethereum. The blockchain Terra comes with a basket of stablecoins pegged to every currency. Interesting. The other thing about Terra is like its whole project is about creating a decentralized stablecoin that is not backed by any fiat currency. And so the whole purpose of the blockchain is to bootstrap that stablecoin. UST, the number one, is their main stablecoin. It's pegged to the dollar, and it lives on every blockchain. It's the number one stablecoin on Solana and on Cosmos. It's like the number 4 stablecoin on Ethereum, and it's the fastest growing. And so one of the ways to bootstrap it is by having this whole blockchain. They're able to create DeFi protocols that are very useful, and those initial protocols create use cases and demand for UST. And there we go. That's what's going on. They're also really aggressively going to market in Southeast Asia. It's based in Korea. There's a lot of interesting partnerships they have with Korea. There's an app that they have called Chai that like 5% of Koreans use. It's kind of like Venmo. And there's a lot of usage in like Thailand on the Mirror protocol, which is kind of like a synthetic stock exchange. So there's a lot of interesting things going on. One of the things that's also interesting about Terra is there's this fascinating relationship between their staking token Luna and UST. As UST is minted, as new apps come out and new users come into those apps, and they all start converting their currency into the digital currency so they can be using these apps, it creates demand. In equal, like as UST is minted out of in this protocol, an equal value of Luna tokens gets burned. And this particular mechanism it's worth learning about, but it's one of the more fascinating bets in all of crypto because it's a layer one token that has this very aggressive burn mechanism as the key product that it has, UST, grows in circulation, and everything they do is trying to increase the rate of growth of UST. They burn more of the circulating supply of the staking token, which means like as they succeed, their main token becomes deflationary. It's sort of expect like the bet on Luna is that the price of it will go parabolic. And it's sort of like one of the first major legitimate layer one tokens that was designed to go parabolic in price. And it's working. Like you can see the mechanic playing out. And so it's like a third of my net worth is Luna. Like I'm
Oh,
all
because
about
that's what got me interested in all this because I've been just frankly just reading your tweets and learning, and then what is it, the last week I think, or the last
yeah, it
month
like
I
rocketed
saw
back up. I think
Terra
we're in the
had like,
midst of like, it's
yeah,
there's this long-term pattern, it'll spike up, it'll probably go down
I
again,
see.
and it'll go up again. But like, what's interesting about Luna is just like, stable coins are like the dominant use case of crypto. Like a third of all transactions on Ethereum are like wallet to wallet stablecoin transactions. And it's just predicted that we're gonna mint more stable coins every month than the previous month going forward for like years, and that will grow. And if you believe that like Terra UST will be continued to be the number 4 stable coin, well, what happens when we mint $1 trillion of stable coins and it is number 4? Well, like it will get the 4th place percentage of that, and then like the next year we'll mint 1.5 or $2 trillion in stable coins, and it'll be number 4 that year, or maybe it'll go to number 3. That's a lot of
So here's
Terra.
a question. For me, the killer app to Web3 that got me interested in everything was NFTs through Top Shot and a bunch of other like Nifty Gateway. So I kind of started getting involved last February. And I've been investing mainly like the pre-DeFi summer way, buy some Ethereum, buy some Bitcoin. And I use a lot of my Ethereum for the NFT projects, lots of gaming projects coming out. That has what I've been using crypto for. But I actually, I have never purchased stablecoin, and I don't understand who would need it and what they would do with it. Could you explain what is a stablecoin? Like, what is UST? Why do people use it, and why is it important?
A stable coin is a crypto token whose whole purpose is to be pegged to the US dollar. And it's important because you can't spend US dollars like risk off, sort of like a risk off asset in dApps. So DeFi, you can't, like, you might want to borrow dollars. Like that's a great currency to, a lot of people denominate, their portfolios in that. And so traders will risk off, like, oh, I want to exit crypto. They will exit into stable coins. Like, and they didn't need to exit crypto really. Like they're still in crypto. They have stable coins. Stable coins are what we borrow and lend in. They are a super common trading pair. Like, so on Ethereum, like a lot of the dominant trading pairs are, route through USDC. Like Try Crypto is a pool on Curve that is one of like the biggest trading pools in all of crypto. So yeah.
And question, so why would you not, or why are stable coins preferable to like borrowing Ethereum?
Well, like Ethereum goes up and down in price. And
I see.
so yeah, I borrow stable coins, and I'll take those stable coins out of crypto. Like I pay for my rent, and I will convert stable coins into US dollars, and then I will pay my rent and I'll buy groceries. I'll also I build up stable coin reserves, and I see those as like the finish line of a crypto portfolio. Like if you're earning yield on stable coins and you can fund your life with that yield, that's like the best, because anything can happen to crypto. We all know it's going up, but like anything can happen to crypto. And if you're earning yield off of, like, doesn't matter, number doesn't go up or down, these are always like dollars, you win. And so like everyone who's like a DeFi degen knows the finish line of crypto is stablecoin farming.
Okay, awesome. So two questions now. So stablecoin farming synonymous with generating yield? Is it the same concept essentially? You want to generate more yield?
Yeah, generating yield is generating interest on your assets, yield.
So I kind of understood the concept of as these new DeFi protocols come out, they incentivize people to provide liquidity, and then in exchange, they'll give you yield. So what is the name of the game? Are you trying to find DeFi protocols that are going to be more popular? And then how do you know if they're going to be popular or not? Or are you trying to figure out the ones that you are going to provide liquidity to?
The way I think about it is I have goals that are like specific numbers. And then I think about what I do in the context of like, is this going to help me hit my goals? So like an example of a goal was like when I worked at Twitch and I was discovering DeFi, like I was making $115,000 a year. Cool. That comes down to $315 a day. If I wanted to quit my job at Twitch and feel good about that, I needed to earn $315 a day. And the way to get that number, you could denominate that in a few ways to figure out like, okay, like, how do I get that? Like, how much money do I have and what do I need? Like, if you had $575,000 in cash, you could convert that into UST, deposit that on the Anchor protocol on Terra, and boom, put that all in the earn tab and you will earn 20% APY. Boom, you are at $315 a day. Quit your job, you have won. Like that, you are earning yields on your stable coins and your position grows. If you wanted to go even crazier, I'm sure that you could borrow against the AUST. Like when you deposit into the earn tab, they give you as a receipt Anchor UST, and that's like a yield bearing position. It's like those tokens sort of like let you pull your cash back out, and like also those tokens grow in your wallet automatically. I can't remember where, but I believe what's coming up is there are like maybe Aave will do this first. You're going to be able to borrow against AUST. So like you're going to have this yield bearing position. Like, oh my God, it's growing at $315 a day. And like those tokens that you still own and have custody of, you'll be able to deposit them somewhere and probably borrow more cash against that. And I bet what you could do is swap that for UST and compound that back into your position. And like that, like, and you'll earn like, 50% more. Like, yeah, that's an example of DeFi investing, I guess.
So you explained the relationship between Terra and UST, and now you mentioned Anchor. How does Anchor fit into this again?
Anchor is a money market on Terra where you can mint UST against collateral. So you can collateralize your Luna tokens to borrow UST against them. You can also collateralize Ethereum on Anchor. And they have a proposal right now to add Avalanche. So I expect in 1 week, Avalanche will be approved as collateral, and you can borrow against them. And that's one way that UST gets minted off of the back of collateral.
Okay, so far everything seems, well, awesome. What's the risk in this? Like, I'll give you an example of a very lame investment. So last November / December, or maybe even prior to that, I heard a lot more about inflation. So in a very, very traditional asset class, I heard about, like treasury inflation protected bonds. And, you could buy $10,000 worth of it per year if you're a US citizen. And since inflation has been going up for the last couple of quarters, you get 7% on an annual, every 6 months. But for the bond, the bond never disappears. If inflation goes to zero, you just get 0% returns, but you have to leave it there in the US Treasury for a year at least. So in that case, essentially, it really is riskless, your principal at least, and you get like up to 7%, or if inflation goes even higher, I hope not, then you get that. What happens if shit hits the fan with a stable coin or like UST Terra? Are we thinking, is this more like bonds where, okay, you just get no yield, or can something worse happen?
So like, what are the risks of like, what, like, how is it gonna all play out? Like, what are some
No,
downsides
no,
of,
risks in the sense of, let's just use the Terra UST example. So let's say you purchase a bunch of stable coins, but you're saying it's pegged to the dollar.
yeah,
So whatever happens in the market conditions, it will always be pegged to the dollar. And then like
yeah,
your
you're risking off on a crypto, on like exposure to the prices, the dynamic prices of crypto assets to, you know, to whatever is going to happen to dollars. And if there's inflation to dollars, I mean, like you're pegged to the dollar. At least you have the option. The risks, though, in my mind, are more around like, what if the crypto dollar fails as a product? Like, what happens if you're holding a bunch of UST and the UST depegs to like go to 90 cents or 80 cents or 50 cents to a dollar and it doesn't return? And so a lot of people who own stable coins tend to pay attention to them as a product, and like they understand that they're all kind of an experiment. And UST is actually in the higher risk bucket. It is an algorithmic stablecoin, which we have seen many algorithmic stablecoins fail. And so, but UST has not. And we've actually seen it get knocked off its peg briefly for a matter of hours or like a day. And it has all these mechanisms that kick into place that help it return to its peg very quickly. And we've seen that happen under increasingly extreme situations. And so people are gaining confidence in UST, I think, based on the sentiment on Twitter. I don't know.
No, but this is it's so interesting because a lot of the terms you're using, concepts, it's stuff I heard about like in college, like in economics class, like pegging to the dollar. Like, you know, when people were studying that, like even today or like 10, 20 years ago, it was about like currencies and like governments, and now like kind
Yeah.
of like individuals and groups of people are doing this. It's just kind of, it's amazing, like the times that
Yeah.
we live in.
Well, you know, and I think it's incumbent upon us to understand these things. Like this is now part of the discourse, at least for the time being, where like the way that the UX of these apps are, like you ask about the risks. The risks are you have new responsibilities. Like when you take on a new role to earn new kinds of yield, you're doing new jobs with your money. And you are now entering a new plane of risk. It's not just like you have a bank account and like the bank is going to go and lend out your money and like share the profits with you and they do all the work. And so that's why you get very little. Like now you got to decide what to do with it. You can make your capital more efficient. How are you going to do it? You have a lot of options. Not of all, like some of them are kind of gray and opaque. You don't really get them. Don't do anything you don't understand. How do you understand them? Well, go off and figure it out and build conviction around what you're doing and experiment. Don't go all in, do little things and then scale up as you learn. There is no one way to have money flow around in crypto. There's a whole ecosystem. There's all those apps I described that are like launching tokens and need emissions. And like, you can also earn fees. There's platforms where like, you're not earning emissions. Like you're actually just earning fees from the actual job, like where users are paying money to do certain things. And like, you're just earning their money. You're not getting like fake emissions. And so all like, there's different like qualities of yields that are like, some yield feels more durable. Like it will be here tomorrow because it's more core to the business than just like a declining emission.
Okay, one final question on this topic, and then I'll switch topics. So let's say I want to experiment with what you just said. Let's say Terra UST. I want to spend $2,000. What's the starting point? Like, what asset am I converting to what, and where am I doing this?
I think a fun one would be you could go into Coinbase. I guess if we're starting in normie land, go into Coinbase, buy wrapped Luna. Then you have wrapped Luna, which is like the Ethereum version of Luna. You then need to get this over to Terra somehow. It's because you're on the Ethereum blockchain. You will need to use a wallet called Terra Station, which is like the MetaMask of Terra. And you will then withdraw your wrapped, you're going to then go to, you're also going to need to use MetaMask. You're going to withdraw your Luna, your wrapped Luna to like your Ethereum wallet on MetaMask. You're going to go to the Terra bridge, and then you're going to bridge wrapped Luna over the bridge to Terra where it gets unwrapped. And now it's normal Luna. once you have it in your Terra Station wallet, you go to Astroport. And what you can do is you can swap half of your wrapped Luna for bonded Luna. And then you can take the equal amounts of wrapped Luna and bonded Luna, and you can deposit them into the same trading pair on Astroport that you just did, swapping Luna for bonded Luna. That is one of the most traded pairs in Terra. And so you could be a liquidity provider for the Luna B Luna pool, and you'll earn more than 10% APY on that. It will compound into that position every second. Every time someone does a swap, you'll earn a little bit of Luna. And yeah, that's what I would, that gets you a flavor of like, you did like a DeFi thing. You took custody of your tokens, you bridged to another blockchain, you swapped on a DEX, you deposited liquidity, and now you're earning fees in an asset that you want to accumulate.
That's amazing. So for your fund, is this the type of, like, this is like an example of one thing you would do on behalf of investors?
Yeah. And then like the other thing we would do is like, we would pay attention to like, sometimes the like B Luna will drift away from the Luna peg because like that particular trading pair has a lot of activity that day. In which case a move you can do is sometimes like B Luna will be, you know, one B Luna will get you 0.95 Luna. So it's like there's a 5% difference that day. That's always very temporary. But if you notice it, you can withdraw from the liquidity pool and swap all of your Luna for B Luna, and then you can unbond it. And in 21 days, all of your B Luna becomes Luna. And so like you can sort of do this 5% arbitrage that opens up all the time. Anyway, I don't know, that might've been too much, but like, that's also what we'll do. That's like level 2 of like owning Luna that way.
No, we'll stick with level 1 today.
Okay.
That's good. Okay, switching topics. I'm not sure if you know much about this one, but as I said, I've been really focused on, you know, Web3 crypto from a gaming lens because that's the industry I work in.
Sure.
I've been just hearing a lot of noise about Avalanche and and their crab game. Maybe I'm just following all these people and then I just keep hearing like the crab emojis everywhere.
Yeah.
So what is Avalanche? Is that a L1? Is that L2? And why is this? It seems to be picking up steam on the gaming front.
It's an L2. It's EVM compatible. They have like subnets. The one dominant game that they have, like dominant app that they have, is Crabata, who like I know the Jessie Mori, who's like their lead artist, also made like the Froyo cats, which are kind of famous. So she's awesome. Yeah, I mean, it just seems like my buddy Ed Chang leads BD for their gaming. I would expect to see a lot more games showing up on Avalanche. A whole bunch got funded. Avalanche has Avalanche Rush 2.0 happening, which is funding a lot of projects. Games take a while to make. And so I think we have like a first generation of sort of like casual games coming out. And I would just expect them to get increasingly sophisticated over the next few years. And it's like a better place for games than like L1. Like transactions are nearly free. They're instant. So I think we're going to see games appearing on Polygon and just other blockchains that have like higher throughput of transactions.
Is there one final thought you want to convey about DeFi investing? It could be a resource to learn more. It could be, you know, why it has become interesting or inspirational for you. Like you're doing this as your full-time thing. Like, so obviously making money is good, but like there seems to be some energy behind it beyond that, which is interesting.
So when I was at Twitch, I led a team called Fandom Strategy, and it was all about like the science of fandom and what is it that gets people to sort of go to work or like feel a part of a fandom. And one thing I've like, the thing about DeFi that I don't even like finance apps, yet now it's my career at the moment. I feel like protocols have figured out how to deputize its users with tokens. And like by being these super transparent organizations, you know, like being at work, I don't know, if you're vaguely interested in what your industry is, like work is kind of interesting. You're at this company and everyone is in that space and you all know a bunch of stuff. It's kind of interesting. And it's like a unique part of your life where like outside of work, nobody else quite gets it. And it's kind of like being on a sports team. You're all in together, showing up at practice every day, and you're all getting better. and you're looking forward to the season playing out. And there's all this like, the game is coming up this Saturday. How's it going to happen? And like, oh, we got a new player. They're really good. And everyone knows. And like, it's interesting. You have this bond with everybody. And I think DeFi, it's like you're on this protocol and like you can learn anything. Like if you can either ask it or you can go to the dashboard or go read the Discord. Everyone is kind of on the same page. We all know what's going on here. And there's many ways for you to be involved. You can get credit for being right just by being early. Like I bought the token. That's all I want to do. I want to be right. I'm going to make money by being right. And like, how can you help? Well, you could tell people about what you did. Hey, all I'm doing is buying the token. That's all I did. I'm early. And they're like, wow, you're early. Maybe they agree. Maybe they buy the token too, and it goes up in price. Or maybe you want to be more involved. You're like, not only do I own the token, I'm staking the token. I'm a part of the DAO and I'm earning fees. That's pretty cool. I learned about that from the docs. And like from the people we all talked about what's the right thing to do. And like, maybe you use the swaps, you're a trader and you're like, I know how this could be better. I'm going to talk about it. And you write proposals. Heck, maybe you vote on proposals. Maybe you're a contributor. There's all these ways to participate and you all get rewarded with tokens and you're all in this together. And suddenly it's a bunch of familiar faces and you know the other users. And next thing you know, you're looking forward to, oh my God, I can't wait for this update on the protocol of this very specific financial app that like, I can't believe I care about. And so like these feelings are new. It's new to feel all this about, like, I think maybe like people who were like contributors to Wikipedia probably felt this, but like those feelings are now everywhere. And that's pretty cool. And like, I can't wait to see what happens when these feelings start popping up in apps that are more aligned with what I'm really interested in. Like, I love anime. I love like video games. I love esports. I love ultimate frisbee. I like being healthy and like going to the gym. All right. Like, I can't wait to be deputized by tokens for like those aspects of my identity. And I'm so impressed with what's going on. And what's crazy is like everyone who fucks around in DeFi right now is making money. Like I'm getting airdrop tokens. Like it's really interesting. So I think it's the opportunity right now is to feel the feelings. I think that's the thing also, like there's like a lot of Web2 haters who like, they hate DeFi and like they hate Web3. I think they haven't felt these feelings. And like, you honestly, you have to feel them to understand them. Otherwise it all like looks different.
Yeah, no, thanks again for your time. I know you're about to hit the road soon for a 3-week travel.
Thanks for reaching out. It's good to reconnect with you, man. It's been a while.
Yeah, likewise. Thank you.